All right, ladies and gentlemen, I got your watch list coming in October 9th, 2019, and it is going to be a wild one after seeing what we saw today. China did give some warnings. The U.S. came back kind of, and then even China were getting ready for the retaliation. But if you saw today was actually a surprisingly big down day. We went down 313 points. Now, this is a little surprising because any of the other days we've been around this low, we never closed below 300 points. We would either be down a lot more or it would bounce and come back up. So this is very interesting. We even pulled this back up on the daily. You could kind of see where the market's at. This isn't looking good. It's kind of taking us back here to some of these levels we were at a few days ago. And now this is very important. And the warning that we got from China has just been the back and forth. I brought this up lightly yesterday, and now we saw more of it come to fruition, just how the politics of the trade deal has came to light. China has literally came to the trading table yesterday. They started bringing up new issues, and we saw that happen again today. And then literally out of left field, you just started seeing U.S. started banning more companies on one of the ban lists. They were targeting some of their AI companies. The market didn't like that. The yuan didn't like that. The yuan weakened very, very greatly. It's even hitting a huge danger zone as we've talked about. See, oh man, yikes. It's up 716 even as I'm talking right now. So that means it's literally was stepping up. And if it does that same pattern it did last night, that is not going to be good. But this is huge because now the market's low. Again, it really, if you flip the yuan upside down, you'll see how that reflects the market. So again, if this starts to break out, that's not going to be good. Then there was some news that they wanted to make a deal, and some people took some positive stuff. And even then, the market even bounced a lot today. And this is a very big sign of volatility, and watch out for. We saw pops without any reasoning behind it. So you got to be careful for that. But then towards the end, we then saw a U.S. came back and said they're going to ban visas on, or Chinese visas on people related to the Jianjing thing, whatever. But again, the whole concept and the underlying factor of everything going on here, the issue has to relate to now we are 1 day away from the trade deal or trade talks beginning. But the problem is now there has been escalation that has been ramped up on both sides. So now we're waiting for this. The market's not liking it. Some people say a deal is already priced in or no deal. I strongly disagree with that, considering how the market's responding, considering we're brought back down to this level. So as more and more information comes out, it's going to be important. And like I said already, this is where traders are going to get made, my friends, because it's going to be very, very confusing up until we know exactly what's going to happen. So we need to talk about that a little bit. I've covered kind of some of the main stuff. I want to show you guys what we want to highlight. Going to cover some of the plays we made today. I did make 2 plays, and I made a big play. It's kind of big, kind of not really, but I do want to start testing something out in this market with kind of what we're seeing. So we'll probably have some fun with that. So hopefully you guys are smart and watching this and understand too. Not this recommendation for financial advice. Please consult with a financial advisor. You can lose off that most of your financial investment. Option trading is extremely risky. And then we're going to talk about everything else we're going to watch tomorrow. So you guys know what you need to do. Drop your thumbs up on the video. Make sure you're subscribed and make sure you are here in the morning. We are live Monday through Friday, 30 minutes before open. And most importantly, you need to post your watch list below. And make sure you got the bell so when we go live, we were actually having a lot of issues this morning. It happened a few weeks ago. I pressed live and it wouldn't show up. But hopefully we got that all worked out. If not, if anything, just make sure you have your live or your bell thingy clicked. But as far as tomorrow, I didn't write down keys for you guys because tomorrow's going to be interesting. It's either tomorrow's going to be very pivotal or the next day. The fact that we even closed down lower here in the after hours and even closing down 300 is not a good sign, because then if we get if we close down below over 500 points, okay, maybe I'll write this out for you guys. Okay, so here it is. This is what I want to say. If we close down 300 to 500 or more points tomorrow, again, off of more negative headlines from China or whatever is going on, that's going to lead to another 500 point down day on Thursday. And then if we do, and if this all plays out and we get it down 300 to 500 tomorrow, and then another 500 point down on Thursday, and then we start hearing that the deal's not going through, that could get even worse on Friday. Now, this is assuming this all breaks down by Friday. And I'm referencing the trade talks, which will have an effect on the market. If not, we might see some negative headlines, but again, the real info and response might occur after the weekend. So we got to see for that, but watch out for even indiscriminate pops and drops on the market. And even then in the morning, the stronger moves need big moves in the morning. So there is going to be a large point down day or even up. You'll notice most of that occurs in that first hour and a half, usually right by 8:30 a.m. Eastern. That's about it. So watch out for that, and watch for divergence. Watch for divergence between certain assets, asset classes, if there's anything lagging and leading, and then also how the yuan might be, and the yuan could even weaken more. And again, if there is more divergence in yuan, that's going to push any of the moves towards the latter end into next week. If those moves occur fast, then it's going to be happening by the end of this week. And lastly, don't get emotionally suckered in. This is a very tricky and pivotal point. That's why I say this is where people are going to get made here, because it's literally fourth quarter. The game is tied. There's a lot of pressure on the Super Bowl 89, whatever you want to call it. There's a lot right here. You got to run it down to the last second. Just don't get a false start, but at the same time, you want to make sure you get the best jump on whatever move's going to happen from here. So keep your head in the game and be ready to respond, and that's where it is here. But don't get emotionally suckered in. We need to wait to see how this is all going to develop, and it's very easy to get FOMO and get ahead of ourselves and not control the position size, which now kind of sucks because I did make a bigger play today comparatively, but we did the credit spreads. But that's pretty much it. So let us get into the plays. And one last thing before we get into the plays, we also have to talk about Powell. So I was actually making the video going over some plays. I totally forgot to mention this. What Powell said at his speech. It was very important. Some people are calling it the quantitative easing, not quantitative easing. He talked about buying the part of the yield curve control, buying up treasuries, all sorts of stuff. But pretty much it was a very, very bullish sentiment, and that's what the market kind of even popped up off of the second time. So now we could see how the trade reacted, but watch what this says. But this is going to give us a few days to let that unfold. But that was very, very interesting comment. So we'll talk about that on stream, and I'll bring it up tomorrow because I want to see more of how the market reacts, because give it some more bad news tomorrow, or even if the market goes positive, I'm sure this is going to come up. So now let us get into the plays. Right off the bat, I'll give you the teaser one. First, we did the Starbucks. This wasn't the big play. I did this one on the Robinhood, and I'm probably going to do that other big play here on the Robinhood, but I didn't, again, just for the sake of how much it cost and whatnot. But there's a Starbucks. I did an Iron Condor. This one was a cheap one, so I liked it because, again, earlier this morning as things were developing, I wanted more exposure to the market because, again, I saw how things moved and the fact we're already down 300 points. I was like, okay, well, let me see if I could get something kind of in the middle in terms of risk reward, so I could at least get something. Either I'll lose a little bit or I'll make a little bit, just because of how the prices were. It wasn't good that we came down. We needed either a higher move up or a bigger move to the downside, which we kind of got towards the end of the day, and that's what I started taking advantage of as the market was moving. But I did a Starbucks Iron Condor. So what we did on this one, we sold a 87 call and bought the 87.50, and then sold the 84 put and bought the 83.5 put. We got $17 credit. The max risk, so the max difference between any of these strikes is 50 cents. Minus $50 from your 17 in credit, you're left with about $33 of risk. That's how much we could lose. So it's pretty much saying you're going to lose 33, you're going to make $100 or $17. It had like a 56% probability, a little bit higher than a coin toss. So I thought that was decent considering where Starbucks was, and it's not a big mover. So there was the first play, but then the next play was a Home Depot, and now I did 5 of these. So this was a credit spread, and then this was a weekly. So this is going to expire on Friday. And again, my plan is, so you got to be careful with this one, because you have to account for rolling it over. That is going to be my plan, is to roll it over if it goes against us. So keep that in mind yourself. But considering I did a lot more contracts, depending if next week's rollover price isn't good on the premium, it could get pretty expensive there to roll over, and it may even be prohibitive. But what I did was I sold the 222s and I bought the 225s, and we sold these for about 195 a pop, or 193 was the average for 5 of them. So breaking this trade down by getting 195, or let's say $190 in credit, it's a 250 difference. It's pretty much $60 per contract. 60 times 5 is about $240. It was about a $300 total risk. So if I'm wrong, if come expiration on Friday, if Home Depot isn't below 224, and that's the crazy part considering how high the credit was, the break even is actually 224. So literally, we pretty much need Home Depot to drop about roughly $2 from here now, which is pretty much what it did here throughout the middle of the day. And if that's the case, we're going to walk away with 5 contracts, $1,000 in credit. Or if we're wrong, we're going to lose about $300. So that one had about, when we did the trade, it was a 30% probability. I think now it's sitting at like 37 or 38%. So that's going to be a very interesting play, and these are kind of what I'm going to be aiming towards. I want to see how we could scale up on this strategy with it, but again, I'm only really going to be willing to do that on some that I think, one, could fall out the money pretty easily and are offering high credit. But there's something I showed today on stream. I was hunting this play the whole day, So if you guys are watching, I kept calling this one out, and I waited, and then we got it here as the market was dropping. I think we were even on the 11 at 11, or it was just right after. I think we were on the 11 at 11. It's when all of this started to come down, and oh my gosh, I'm totally forgetting about that. Even what Powell said, I totally forgot about that. But regardless, the market was up, and this is what I was talking about, because that play was such a deep in the money credit spread that from here, from 227, even right here, honestly, almost there, we only made like $20 a contract on it so far. But at this point here to here, whether it was $1, literally, it's $1 difference in the strike price, but the amount of credit you would have received on the play was pretty much staying the same. And this is pushing it to the wall. And this is what I was saying. I was saying, hey, we could wait, and we don't have to get that play, because it's like we're kind of already in it. Because even if it came back down, it's not like we would have been missing out on anything too crazy. That's why I'm saying we're gonna wait. But the whole idea is, with some of these deeper in the money credit spreads, you push it to the wall. You wait till it really starts to drop, and then what's gonna happen is that it's actually gonna still hold relatively the same credit. So literally, as it was dropping $2, I got the same credit as it was here, but now more time has gone by. I got to confirm more bad news and let it get in there, so I took it. But again, still a risk as far as even statistics go. So those were the two plays today. But again, I still saying same thing could have been done with McDonald's here. It was interesting. I wasn't as sold with it. Again, McDonald's is kind of more at the lower end of the range comparative of Home Depot being higher. That's why I kind of liked Home Depot a little better, but they're still on my list too. Again, if things do start to get a little crazy here, these are the ones I'm going to kind of go for, but I like them. And then we're still in the Apple play, and this is another one. I was thinking of either selling another weekly that we could have gambled on, and you guys remember, and I say gamble just because it would have been literally a weekly, and selling one of those in the monies. But the Iron Condor came up a little bit, but then that Facebook as well too. So I might even average down and get another one of those Apples, because again, it's a high 190 credit, or the Facebook now. And those are coming down. Remember, we sold the 177.50, so if these fall out the money, and thankfully this one's actually, I rolled over to the extra week here, we could be getting our money back. So out of the 160, we've gotten back $45, so we'll see how that plays out here. And hopefully you guys are even seeing, it's a little slow and steady with that. It sucks we were down on those, but if you kind of even see overall on the weekly, though, or on the monthly, it's still the account, we're still right under all of those highs when we were up on those plays. So to see how these turn around, it's going to be very interesting. We did end up losing back on the Disney, but watch that. And then I'm also going to be watching Amazon now too. I like where they're at. We haven't made a play. I think Iron Condor could be good on them. But if anything, if the market starts selling off, or if it does start to bounce, I like where they're at. They're at a very big low. They're either going to break through and smash below that 1700, or if there is anything positive and bounce up here, Amazon's going to be good. So with earnings right around the corner, what's going on at the stock, I'm really starting to like Amazon. So don't forget about them. And again, that's a big mover, a big play, a big stock we all like to play. So those are good. What I'm going to be watching. Same thing with Boeing too. Somebody even brought up, they say, just play some Iron Condors on Boeing or spreads. I'm kind of down. Depending on what it does here too, it's kind of the same philosophy as Amazon, but flip it upside down. It's near the top. So it's either going to break out and go crazy through there, or it's going to come back and stay in this range. And that's going to be an interesting one as well. So I like that. Then watch SLV, watch the banks, TLT, and all that. But specifically, watch Bank of America. They're now almost below. So you can see, compared to the SPY, banks and SPY were moving hand in hand. But the the S&P and the markets didn't close lower than these 2 days, whereas the banks did. Where at least Bank of America, even XLF, same situation. So this is now saying something, and it's outpacing. So watch that. Now watch SLV. It came back up 3-4 days of lagging, then it popped up here. SLV, it's either going to run on this wave or give it one more week. So again, this is a kind of a game of chicken. You don't know what's going to happen. It's going to pop either this week or next week if there is any negativity in the market. So it's just going to be a game of musical chairs, but I might even start wanting to scale in some of that, or maybe sell some put spreads. I don't know on there, but I don't think it's even going to be too profitable. Well, we'll look. Someone remind me to check those out. And then TLT too. TLT still holding up, even with a red day and how it was, saying it closed red, but they were holding up. They're still holding up this 145. They were up a lot more in the morning. I think they're still deadly and at a dangerous point, so keep your eye out for that. And then lastly too, Microsoft. Again, similar situation that could be done with the HD. They're not a big mover. They're there at the top, so depending on how they move could be very interesting. And they're at an interesting point in general. And if they do fall off, I think they have more downside, so I'm going to look to see if this one would make even more sense just buying straight up puts. But the fact that it's held the range makes it even appealable for the spreads. But I like those. Lastly, now on this chart, these are the more riskier ones. UVXY. Remember, I sold out of some of those UVXYs. It's bouncing, and it's harder for this bounce to bring it back up to these levels. But that's the thing. If things really do start getting shaky and it runs up and it does break above there, this could get good. But some of these plays might be a lot cheaper. So watch those, or on quick flips, quick volatility. Don't forget how you could play UVXY in the midst of everything. And then Shopify and Roku. Roku is up. I don't know if we do get a shitty stock rotation tomorrow. Shopify went down a lot, coming back down to this 309 level. So it's either going to hold this range. You can kind of see Shopify and Roku look a little similar in their own respective rights, but keep eye on both of those. How those play out could be interesting. But all in all, it's going to be examining the news, examining these core plays we have, setting ourselves up and controlling your position sizes and the timing. You know, that's why I kind of like the spreads at this moment, because it's going to give us an opportunity to win. It forces us to take profits because you could only make so much, but be careful chasing the dragon. And I would say, too, mix up both strategies. Don't get emotionally pump fake and be smart. Remember, there's going to be another week, another week, and another week. And if this is going to get into real October volatility, this is going to pick up for a long time. We're going to get a lot of activity. The next 2 months are going to fly by without you knowing it every other week. And that's what I say. Some of you are going to want to quit. Some of you are going to fall in love. So let's see what happens, baby. But that's your watch list. Stay hydrated, healthy. Make sure you guys are ready to go in the morning. Be positive, respectful. I better see your watch list. I better see your like there. I better see you in the morning. Make sure you got the notifications. Make sure you're ready to go. And let's go.